is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome here to the Diagnostic Trading Hour right here on TFNN. I'm your host, Darrell Martin. Don't forget you can listen to us anywhere from your mobile phone at TFNN.mobi with 9 hours of live trader commentary each and every day. So let's check out where the markets are right now. We got the S&P. It's up 1.5. We have the Nasdaq up 17.75. Russell's up 6.5, and the Dow's up 6. Gold is currently sitting flat on the day. Silver is down a little bit right there, not a whole lot. Copper's down about 1/3%. We got oil oscillating around after that big drop yesterday, but it's moving on back up right now, moving back up towards its settlement price. We also have natural gas. It's down a little bit more. It's down about 0.5%. We got corn is, corn is down about 7 points on the day, so a 1.6% move right there on corn. Big move on corn. We got soybeans down 3.75. Euro dollar is currently up 39 pips. Pound dollar up 29. Aussie dollar sort of mixing it up a little bit. Aussie dollar is down 50. So dollar stronger against the Aussie, but weaker against euro and the pound. We got euro yen is currently down 15 pips. A dollar yen is down 43. Pound yen is down 35. Dollar CAD's up 5, while dollar franc is down 37. So like I said, pretty mixed on the dollar strength and weakness across the board right there. And it's the whole, lots of varieties, different ways you can hop in and take advantage of everything. All right, so let's see what we can do over here to take care of a couple of things. One of the things that we got here is the one news report, like I said, we have for the week is going to be coming up on Wednesday morning, Thursday right here. So I want to make sure we went over that yesterday. I want to make sure that you do have it and you have it in your list so that way you can take advantage of it. And that's going to be the revised GDP out of the pound coming out tomorrow morning, 4:30. And I want to see also if there's anything else that we might be able to take advantage of, maybe even today. So maybe we'll do a live trade today if we can see one that lines up. Of course, we've got to see everything line up. Don't want to push the trade just to have a trade for trading's sake. And let's see here. I want to give you the exact stats, and I'm pulling everything up for you as we do that. And like I said, that's pretty much going to be it. We do have the Canada GDP, but the stats are just not there. Only 40% of the time on the Canada GDP does the USD CAD break 50 pips. When it does break it, it moves about 57 pips. So on average, meaning when it goes, a lot of times it will go pretty far, but a majority of the time it's staying under 50. So it's only, but 60% of the time it's not breaking 50. 40% of the time it is. But looking over at the dollar, or not the dollar, but the UK quarterly GDP that's coming out, the revised number coming out, we're looking at an expectation of around 0.8% right now. Trying to see if the economists have updated their numbers at all, but no, that looks like that's still where we're sitting at is 0.8%. And a couple other numbers will be coming out at the same time. We'll have the preliminary business investment quarter over quarter. That's coming in at 2.3, and the last one was revised down. And then we got an index of services. And so on this one, looking for 0.8, and ideally we get a deviation of about 0.3, meaning that the number comes in around 1.1 or 0.5. Okay, so if we get 1.1 or 0.5, that's going to really what we'd be looking for to get a big move. Now the average move is 70 pips, and about 71, actually it's 70.8. So 71% of the time it breaks 50 pips on the pound dollar. It's really the best out of the possible choices available. Potential butterfly, they did add in, Nadex has added in the euro pound. So that might be a trade I should add onto the list there. Euro pound, the average range is only 31 pips, and only 20% of the time does it break 50 pips on this release. And so that really literally could be a pretty good trade for you on that euro pound. So you might want to check that out as a sort of a butterflied or a straddled, how do we put this? It would be a cross, an intra-market, butterflied straddle. or butterfly and strangle. So iron, butterfly, and straddle, iron, butterfly, and strangle. Where you're going in on the euro pound, and you're doing an iron butterfly, and you're going in on the pound dollar, and you're doing either a straddle or a strangle on the trade. Now that release again does come out early in the morning. It comes out, I want to say 4:30. Yeah, 4:30 in the morning Eastern time. And I know a lot of people, they'll go in literally before these trades, and they'll literally just put them on with the idea of letting them do their thing overnight. And, if I look at the euro pound, like I can see it only moves on average, like, an hour and a half, couple hours before, 20 pips. We're looking for about 30 pips afterwards. So you can easily possibly even go and do a butterfly, like a 7 a.m. butterfly around like midnight or something on euro pound on this trade. It'd be something to at least test out. Always test anything out if there are these ideas out there. Try to give you different ways to look at the market, different ways to see how to trade the market. And, this is just one of the many ways to trade it, trade the news. And now if you're not trading the news, you may just want to be aware of the news. When I get up in the morning, I should be looking what happened on the pound on that GDP announcement last night. What kind of strength or weakness did it give to the pound? And there's only about 15 to 30 minutes of like true fundamental shock, like where everything readjusts. But the market a lot of times has a tendency to, trend in the direction of a report. And so with that in mind, you want to know that when you get up in the morning. That's, part of your checklist. What news came out? What government news came out that I need to be aware of? How did that impact the market? Is that impact still look like it's a trend that's continuing? Because it obviously can help me find some more volatility if I'm looking for a little more volatility. And, and then, of course, any other big headlines, that may have been released. That's part of your day every day, and not that ultimately all that stuff is reflected in the chart, and that is 100% true, and you should always let the chart be your guide, okay? All I'm saying is it doesn't hurt you to be aware of, now not to form an opinion, because here's the problem with opinions in trading, beyond all the other, common statements, but simply opinions make you want to be right. You want to prove yourself right. I think the market's going up because this report happened. That's the line you don't want to cross, okay? So this report was worse than expected. It should make this market go down, or better, it should make this market go up. Not should, okay? The report was worse than expected. The market went down. That is what normally happens. That appears to be what's happening today. That appears to be continuing. The technicals line up and confirm that. See, it's a small difference, but it's a huge difference in your trading. It's being aware of the fundamentals and using them as somewhat of a little bit of a guide of what to look at, what to look for, but not being completely driven by the fundamentals. Now, if the longer you go in trading, the more fundamentals can help you out, and probably the more, definitely, the more weight they should take, the longer, driven you are as a trader. Meaning, like, if you're going in for, position trading, meaning holding something for weeks is a really short time frame, then fundamentals are going to have even more importance. If we're doing, like a long euro-dollar play or, whatever. So if you're going long euro-dollar, short euro-dollar, or whatever, fundamentals are obviously going to have a lot more importance to you as a longer-term trader. The shorter you are, the less impact they have as far as the actual fundamental outcome of what should eventually be shown in the price, and the more about the fundamental shock and the trend of the day or the week, okay? So technical analysis, in all cases, rules over everything else. So, context of technicalities is king. Everything else just gives you an edge to learn how to read, interpret, and, over time, as you start seeing certain reactions happen over and over and over again in a certain way, that does give you an edge in your trading. So it's just like people learn, chart patterns and, different things like that. Well, this is fundamental patterns. So when this report comes out, this is often what happens. That's how I use it. Hey, it often moves 70 pips. So you know what? I'm probably not going to be looking to buy, pound, like if I go into pound dollar and it flies up 70 pips and I get another buy on my, whatever trading system I do, I probably don't want to keep buying. I don't want to keep adding on because that's pretty much the range. Like we're, 30 minutes in after the announcement, it's moved 70 pips. Great. Now, if I want to trail my stop, fine. But do I want to just keep piling in on that position when we're already really pushing our averages? So I'm really saying, you know what? It may go more, but a lot of times it won't go anymore. And so to add on, I'm really stacking the odds against me on adding into that position when I'm at the top of that range. And whereas if I'm at 20 or 30 pips and it's moving, and I got 40 pips to go, the technicals are looking good, the fundamentals are in my favor, there I could add into a position along the way. But when I get that 70, I better start either, starting to scale out or trail my stops or whatever. So it's adding in all those little pieces to be one step ahead, such as the ranges on the fundamentals or the statistics on the deviations and different things like that. All those pieces together will help you as a trader. And you don't just want to get solely reliant on one thing alone. If you were going to be solely reliant on one thing, I would say be solely reliant upon technicals. But, I think, and most of the traders I know, they are looking, they're aware of the news, they're aware of, deviations, whether it be, my deviations or some sort of pivot deviation level or standard deviation. You got to use statistics to have an expected move, not your expectation, because your expectation is either too high or too low, because you don't want it to move, or you want it to move, to the, all the way, to the moon. And so you need something that's actually statistically based, that's not based on opinion, but based on fact of how things are priced. And that's why I use implied volatility to determine how things are priced and what expectation of movement I'm looking for on any given day. So speaking of deviation, let's go in and we'll pull some of these up. We'll look at them and see, what kind of possibilities may exist if we see anything flying up on the charts for us. Okay? And let me get a chart over here, and we'll start going. So we'll start off at the top of the list here with the Aussie dollar. And on the Aussie, see how we have that move down to a deviation. So right there, bounced right off of it. This is, again, if you get a one deviation move. Now, we even had a we really had a 1.5, a little over 1.5 deviation move, because we moved up half a deviation. And notice how the market's just hitting that over and over and over again. So just continually hitting it, you might want to be starting to look for a reversal. Okay? It is showing that this level is definitely a resistance level. I mean, it's been showing as a resistance level since 6:30 last night all the way up until pretty much 3 a.m. this morning. That's a good sign that, if you hop in, you're a European trader, whatever, you hop in, European hours, boom, you start seeing this trend turn over. That's a trade signal right there, right? That's a reversal. That's a double, triple, quadruple top, whatever you want to call it. So all the way across the board, that thing is literally just turning around. And, I mean, you broke the high by, a tick, and then it turned right back around, and it closed down when it broke it. It didn't close up. It didn't show strength in that process of closing it. So you can look at volume and everything else. So it moves on down. We got settlement. It hesitates for about 30, minutes or so. Then, boom, right down to, 0.5. Doesn't spend any time there. Doesn't show it as a resistance level. Breaks right through it. Goes down to 0.7. Drops right through that. Now it hangs out a little bit. It almost starts showing 0.7 a little bit as a resistance. And then, support up here is what I meant. But resistance right there at the 0.7. And comes on down to 1. Actually busts through the 1, but then starts pulling back up. And there's, your one deviation move from settlement to low, plus a 1.5 deviation move from high to low. All right, stay there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back here to the Diagnostic Trading Hour. So looking at oil right here, we got oil moving on up to 0.5 deviation. Moving down to a negative 0.5, so a 1 deviation move. And so bouncing right up, working its way back towards settlement. So for a solid half deviation move on back up. So we'll see if it can maintain that right now. Looking on, let's look across the markets here and see what else we got. We have the indices, and let's see where they are on the day. So coming up on this holiday week. A whole lot of nothing going on. Implied volatility dropping down a little bit across the board. But I see it right there. You get a half deviation up, half deviation down, not even moving to either one of those levels. Even high to low, not even getting a half deviation yet. So pretty flat right there on the S&P. Checking out the Russell. And I did notice quite a bit of an implied volatility drop this morning. Which is interesting. So IV drop usually is either going to lead to a flat market or an up market. And as you can see right here, we got a very up market on the Russell. I mean, it literally has just been trending all morning long. And so a big move up right there on the Russell. And let's check out the Dow. So on the Dow, we get the flat market just like the S&P. So it's a little bit odd, seeing all this and seeing the differences. But the Russell did have that one change And I was talking to a trader this morning. We were talking about how we saw that difference. NASDAQ has moved up, not as far as the deviation move, but a little bit better, nice, smooth uptrend than a couple of the other indices right there. So let's see here. Just want to look at one more thing on that. Yeah. So NASDAQ has had a nice move up. Russell's had a nice move up. The Dow and S&P, pretty choppy across the board. Like I said, I did see that implied volatility drop in this morning on the Russell itself, and it's a little bit different animal. The hours are different, so it'll trade till 5 o'clock even on Friday. You also have, unlike the other ones that are, they cut off at 3:15, they open back up and close back down and come back up. But anyway, so Russell trades longer. It also is completely exchange based. You don't have the full contracts, and it's ICE. So it's on the ICE exchange. It's not, you don't have all that going on. So there's a whole lot of small differences, but also it has a lighter liquidity than the other contracts. So with that lighter liquidity, you can also get a little bit more sensitive change in implied volatility, which we saw today. And, of course, that led, like I said, either to a flat or an up market. We got flat on two of them and up on the other two. And let's see here. So that sort of wraps up the indices for us. We can go in. Let's look at some of our metals. And we'll see right here we got silver. It had a pretty interesting move on the settlement there. Let's see here, because it settles earlier in the day, but then it took off last night. It ran straight up. I had to go in and make an adjustment on the server because it ran up so high during that gap period from when it closed down. But it ran up here and literally up to basically a 3 deviation level, and then we saw it pull all the way back down. We should not be surprised. Remember, I said these statistics can be in your favor. And so you hop in, and around 8 o'clock, you see all of a sudden this thing is like right at a 3 deviation level. That's a 97% of expected move from the pit close to the next pit close. So you really should not expect, that's just like 99.7 if it reaches that level. You should not expect it to go any further. You should have expected a down move. And I maybe chop, but definitely some sort of pullback. And so it was really a great setup for a reversal trade on silver as it pulled all the way back down to settlement. And a very high probability in all ways. Trade would have been a very good trade to go in and, target each deviation level even. At least a 2 or, 1. I mean, you could even run all the way back to settlement potentially. And silver being, what's funny is it looks like it's not volatile at all when you wake up in the morning and it's all the way back down. But you got to look at the overnight. You got to look at the pit close. Don't just look at Globex. Make sure you're aware of the hours, the actual hours when the pit closes. That's very important. That's your settlement prices. And notice how it targeted on down, and then you get this big spike right here happening at the settlement level, which would have set you up for maybe a 10 o'clock, maybe even an 11 expiration, for a either 1, targeting the 0.5 deviation level, or 2, for simply doing a premium collection trade, like right there in the morning. All right, let's check out gold. And we got gold right now. Let's see here. We'll come back. We'll wrap up gold when we get back right after this break. Stay right there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so just looking across several potential trade setups. And I got Mark over here sending me a couple ideas as well, so he's helping me look through some of these markets. And one of those being the Swissy here, sort of seeing what's going on. On this, looks like we do have a definite volume spike there at 110, so taking place. So that's one trade you could look at getting in on. Right there, 110, we get that break. It pops. If I hop on over to 10 minutes, you'll see it a lot more clearly. But you have to look at like the 6S or whatever to see the actual volume spike. Here's an example of putting them side by side. Going on in here. Switching this on over to 10. Let's see what we do that here, right? So we got settings. No, not settings. There we go. Okay. So anyways, but you can go in. There's 10,000 settings on here, but you can go in and you can update your different sizes. There you go, intraday, go to 5 days, go to 10 minutes, and that's what I was looking for. So intraday, 5 days, and we do 10-minute bars. So you got 5-day bars, you got 5-minute bars, you got 10-minute bars. Anyways, you got a nice setup. The one thing we're looking for on this is really a breakout of this high. Okay, so we got a high on this bar at 90.76. We're also on this bar right here, See, 90.76, and this bar's waiting to complete before it confirms what the high is. And we got the same thing happening over here on the other inverted. Now, if that inversion ever messes you up, little trick, you can just do like times -1, and it'll flip it around for you. So that way the two charts will look the same. Okay? So a simple, easy trick right there. This is looking at the futures, this is looking at the spot, using the futures to see the volume. So you definitely got the volume spike, but you haven't got the break of the bar afterwards, and that is the big key in the volume spike. So if we saw the dollar freight spot break its current high over here of 90, let's see what we got, 90.76 on both of them. So we really were making for 90.77. So I'd have to break 90.77, force to have an entry. If we don't get that break, doesn't mean it's going down. Could be going down, could be going sideways. But if I don't get that break, I'm not taking a contrarian trade as to the current trend and what it's been doing here for the last few hours. Okay? So, but if it does break that, if it does go up there and break that 90.76 and hits 90.77, then I have a potential entry. Probably at this point, I'd be looking at, maybe the 2 o'clock, probably the 3 o'clock expirations over here. And so let me pull up, and there's several ways to do it. You can go in and you can pull up the spreads. So you can click, buy side, and I put like a 0.5 on my 1-to-1. Usually looking for, at the market. And so that'd give me a couple choices, about $45 risk across the board on these. So not just a big profit. Now the big advantage here is if it goes flat, doesn't do a whole lot. Make lose a little, no big deal. If it goes against me, my risk is definitely capped. I could, set my exit at like the low. So which would put me like at 90.68. So we only be talking about what 10 ticks of risk, 67 to 77 or 78. So only talking like $10 of risk because you can get out of the trade. So I can put this trade on for only $10 of risk, but if it flies up, 20, 30, 40 ticks by 3 o'clock, then awesome. I could have a really good risk-reward ratio, and with a very, very small risk. And that would actually probably give me a lower risk than I would if I was doing premium collection. So don't forget, you can also apply these to the spreads. So again, I go in, and as it's going down, look at the one, and by the way, check this out. This is, again, a perfect, example of why to use the scanner. 21 minutes, 81 minutes. Exact same risk, exact same reward, exact same price, exact same break-even distance. Okay? So why would I even bother? There's no reason for me to even bother with the 20-minute one because I can have 80 minutes with all the same variables. Okay? Now, I could go down. I could look at this wider spread if I wanted to. It's a little higher margin, but it also gives me a little more prop potential if the thing really does run. Do I care? Do I think it's going to run that far? Probably not. I can look at the deviation levels to see if I think it has that potential to move. Don't really think it has it. So this right here, basically is within my realm of reality of expectation of movement, and it gives me the lowest margin, the lowest max risk requirement with the maximum amount of time. And again, I don't have to take on $45 of risk. I can get out if it moves against me by 10 ticks. Okay, so I can have a $10 risk on the trade. Now, another choice I have is going over here to the binary scanner, and I can select just the one instrument I want to trade, and I can do a premium collection trade. You're coming up here in the next, just a few hours. Scroll on down, see what's available. So we got a 90.69 buy side potential contract. That's a 2 o'clock for about $77. Now it's all the way down there, so of course it's going to be really high. It's not going to be worth a whole lot to me. There's probably not going to be a lot of good buy sides if that thing does get back up there. So if I see a V spike, this is another very good lesson for you. If you've been following this volume spike reversal system, which I love doing, it's so simple and it's very accurate, is I go in, and when there's a volume spike right here, so a huge volume spike right here, and then the next two, the volume bar before and after it are less than half. Okay, so not hard there. Okay, 500, 400 contracts, 139 contracts, 80 contracts. So those are less than half of the volume spike. And then the bar after, within 3 bars after the big volume spike bar. So we got this bar, then 1, 2, we go one more bar, okay? If it breaks the high of this bar, then I go long. It's real simple. Why? Because that's where all the covering's happening. They're closing out their positions, okay? The guys who got in the morning, drove the thing down, are now taking their profits. If that happens and it starts popping up. Okay, so that's right now, that's my assumption that they are taking profits like crazy, and that's what's pulling that pullback. And if that pullback continues, then that means not only are they taking their profits, but also people that are going in, there's going to be stop losses being triggered, all sorts of stuff like that, people getting in at the bottom, waiting too long, and that can continue that momentum, okay? But it has to break this high. Or, over here, if you're doing the spot, has to break this high. Now, of course, I got to look at the futures if I'm trading the spot FX so I can get real volume. But it's got to break that high. So until it breaks that high, no trade. But what if there is no trade? Even if I have it. What if everything lines up, but nothing's there? And I get up there, and by the time I get up there, there's only like a $5 contract, okay? That's when I go, you know what? I'm going to go ahead and switch over and check out the spreads. I can, honestly, more often than not, I can take a lower risk. Maybe not max risk. Maybe not max risk. Probably most of the time it's lower max risk. But, you're talking 10 ticks is a $10 risk, okay? So I can take a lower risk, and if it moves up 10 ticks, I'm 1 to 1, right? So for every, tick it moves up, I make $1 there. And but it moves up 20 ticks, 30 ticks, awesome. Then I can really start bringing in some cash. But just make sure it gets that breakout. Notice how the rules, plan your trade your plan. This is a classic example of that. If you just hopped in on the thing, you would have got in too fast, and you'd be in a losing trade right now. But if you just follow those simple rules, I can't make it any easier than this, okay? Volume spike, breakout of the bar after the volume spike with, within 3 bars, that's when you have a buy. And then your buy target's going to be, your deviation levels for it out of the money, or it's going to be a, an in the money premium collection with the strike being below the low as a possibility. And the best ones, the most preferable ones being at a 1 deviation, or within a few ticks of a 1 deviation move. So that's one example. And again, people sometimes, they think, teach it with the binary so often they're like, oh, I can't do it on the spreads. Yeah, you can. You can. But sometimes it's better on the spreads. Sometimes the spreads are your only choice, unless you want to go in and trade the dollar franc, which is perfectly fine too. You could just go in and you could do dollar franc. You could do the success. So there's a lot of ways to apply this exact same strategy. And let's see here. Let's see, what else do we got? We got the dollar franc. We'll check out, there's a dollar yen one we can do a review, and we'll check that one out. Pull that up. And again, let me pull up, you can use Thinkorswim, you can use TradeStation, you can use Ninja Trader. So I prefer Ninja and Thinkorswim. There's advantages of each one of them, okay? So it depends upon what it is you're looking for. And let's see here. So I just like to flip around so everybody can benefit on it. But we'll go over here. We got a V spike right there. Notice it was coming down, coming down, coming down. Didn't break the high. Did not break the high. Okay. And we'll go over here. We can double check. Just compare those 2 bars side by side. Okay, that was our spike bar. Low bar. Okay, it's a counter trend trade. So that means we expect it to go the other direction. And so that right there being the V spike bar, that bar, we had to break the high of this bar. It did not break the high, therefore no trade on that. Okay? So in every case, we're looking to go counter trend, and we didn't get that counter trend move on that one right there. So it's a little earlier in the day. We might have one forming right now. Okay? And I also always, when I do this, I want to pull up and look at, where we at on we're at 0.7. And now if I back up, are we truly at 0.7? Did we have a little bit more than that? Yeah, we had a little bit more. Probably not enough to get us all the way to 1 deviation, so that doesn't make it my favorite. But, because my favorite ones, my favorite setups are the 1 deviation move ones. You could have said, well, we do have a V spike right here, so, but where are we at? We're at, let's see, on that bar, it's 11:30. So let's look at where we're at in relation to this right here. So zoom in a little bit, and at 11:30 we're basically at the half deviation line. And so you could have went in for that, but you'd had to choose one down here and be looking at the 12, or if you wanted to 1, it would have got you 12 o'clock. You could have got in, and that maybe if you can't find one that's good and close, maybe you're just going to hop in and try to grab a spread that expires soon. Just try to grab 10, 15, 20 ticks. One of the tricks on spreads is if you hold them into expiration because they're going in your direction, you don't necessarily actually pay the bid-ask spread because you get out at settlement. You don't get out at the bid. You don't get out at the ask. You get out the settlement, which usually is going to be somewhere in between the two. So that actually can save you a few bucks if you can hold it. Now, it also could cost you. But if you don't have the 2-minute dark zone like you have in binaries on spreads, they'll actually trade at least up to a minute before, if not all the way to the end. So that's another edge right there where you can hold that and trade it. Now, don't hold it just to save the bid-ask spread, because maybe if it pops up enough, you'd be better off closing it out. But understand you're going to get a couple more bucks, which can add up if you have a lot of contracts. If you have 50 or 100 contracts, that really adds up. But if you just have one or two, it could add up for you a little bit. A couple bucks, cover your commission type thing. Not real commission, I guess, but exchange fees on the trades that you're looking at. All right, so that little cap there of the dollar yen. And let's see here. We'll check out the Russell. So let's go here and let's look at the Russell. And it's moved on up to 0.7. This thing's been strong all day. I wouldn't touch it. I would not short it at all. We don't have the implied volatility has been a little nuts on it. I'll definitely give it that, just due to, like I said, it was like almost a half reduction in IV on the way I calculate, because I calculate for very short-term moves. And just looking over here at my old choppy market, a little bit of a choppy market going on right there where IV was going a little bit off, a little bit different, and starting to do it again right now. Starting to get choppy market. Basically, it's where the RVX and the Russell are diverging in their direction. And so we're seeing that happen. It's basically going flat. Now, choppy doesn't mean it's going the opposite direction. That's one thing to remember. Choppy does not mean opposite direction. Choppy market means it could be opposite, it could be down, it could be up. It means you don't know what's about to happen. So it's not a tradable thing when you see that chop. When you see that divergence in implied volatility versus the underlying, it's a be aware options are moving. Option prices always move because implied volatility moves before the underlying market. And if it's moving the opposite direction, then you need to be aware that something's happening. Either somebody's hedging or they're getting rid of stuff because they're about to make a big move, but something big is happening in the options market. And that's a good time to tighten your stops or get out. So, but right now, it's just clearly, going. And so I'd just be tightening my stops and enjoying the ride. It's a pretty clean, don't get really more clean of a trend than that. It hadn't even broken the 8-period moving average since it closed above it consistently after settlement, after that settlement hit right there on the, 1030. So since 1030, it's been closing above it all the way. So I would just keep riding that. Would not look to fade that and go short. You want to be careful on being a contrarian to really have a reason to go it, and I'd say definitely look for, more than anything, those volume spikes will be your biggest key in doing so, and especially when at a 1 deviation level will be your strongest ones. So you can go in, you can go for a few, but if you want those best signals, if you're trying to be picky, then and picky usually can help you out, so you don't overtrade, is ideally 1 deviation or 1 deviation high to low. Combine that with the volume spike. And it may be a few ticks off, but and then that's your trade setup. That's your number one setup you're looking for. You may not always get that. It may not always move to that 1 deviation level. So that's why when you're trading these, looking at a lot of markets at once definitely does help out quite a bit. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Might have another volume spike trade setting up right now over on the dollar-yen. The last one did not get triggered because it did not break that high. So we had the volume spike right here. We had the high right there. High was not broken. So again, volume spike right there. High not broken. Now you could have got in, I guess, on this, but that would have been pushing. The thing is, we got another volume spike that happened after it. So once that new volume spike happened, and look at how also the stop loss was hit if you look over at the futures. And if we look over here at the spot, we actually don't see the stop loss being hit. But on the futures, we do see the stop loss being hit. So that does give you a little bit of an edge, okay? To go, hey, I'm going to back up, and glad I didn't get filled on that one. Let's wait on the next one. And over here, we see that we do get another volume spike. We're waiting on this bar to close out. If it does close and then we break the high, then we have a long entry on the trade. So anyways, be watching that one, checking it out. We'll see how it goes. But you know, if this one, if we get that half volume and it breaks this current bar's high, then we could have a good potential solid trade. And it's interesting seeing, you know, just the difference in pricing. You know, looking at how this lines up, but we see this, you know, massive bar right here with the open and the high, and how our open and high is here, and then right here we barely see anything happening over on the futures market. But we see this massive spike, and what looks massive isn't that big. But it's still about 4 ticks, but we don't even see that spike over here in the future. So I like to a lot of times watch them side by side and put them up. You can, if you just want to look at the volume, you can add in just the volume on the trade, but also it's nice to watch them side by side. And I will, like I said, I'll invert them so at least they look somewhat similar to me when I'm looking over, at the two different charts to make it make a little bit more sense. So that way, you don't see, up and the down, going, looks like a contrarian trade almost. So you can drag that out, try to equalize, the bars right about there. So that'd put them on the same time frame, looking about 5 to 13 at the bottom. You see the hours right there. And that helps you see, comparing the futures to the Forex. Makes it a little bit easier. Like I said, some people, they may prefer just to look at them in the regular manner, which would be this right here, But anyways, let's go over, let's check out the yen on the futures. We had the Swissy one up. Let's check out the yen one. Let's also invert that one, see how it's inverted as well. Okay, so we'll invert that one. And we'll dive into it. And so we get the volume spike here. This one does break out. So as a possibility, let's see, starts moving. So we got that down. We got a big volume spike on 6J there. It breaks that high. We have, so that'd be right here. And it does break the high. So, okay, I see the 101.20 right there. So 101.20, it pops up. You're able to get in, grab the trade, and it's been moving up ever since. So it's been, so far, good V-spike trade. And we got one trader posted on here that already took profit on the trade. Let's see. Yeah, good job. So good job there, Mark, on knocking that one out. And again, just a simple volume spike trade. And looks like probably won't have one on this one right here simply because where it's at. Looks like we're already breaking that 50% mark. But yeah, good job. And let's see. Trying to see if anything else that we might be able to look at. So we're coming up here on the end of the hour, and I'm going to be out a couple days for the holidays. So I wish everybody, happy Thanksgiving and enjoy time with your family. Relax, have fun. Don't forget why you're trading, why you're doing this, is to spend time with them. And let's check out where we're at on the markets. We got right now, we have the S&P up 3.5. We have the Nasdaq up 21 with the Russell up 8.6 and the Dow up 17 points right now. So looks like the euro dollar, Aussie dollar, still mixed bag. 47 up on the euro and 36 down on the Aussie. Y'all have a great day. Stay tuned. We have another great show coming up for you after this, and I will be talking to you next week.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.